Hi there, welcome to Monday Moments with Quynh. I'm here with my award-winning, awesome friend and mortgage agent, Dion. How are
Hey,
you?
Glenn. I'm great. This weekend was the type of weekend that an Australian in Canada lives for. So I had a great time in the pool, running around with the kids. So really, really nice weather.
Really? I thought it was a little cold yesterday, actually.
Oh, really? I guess we did
Yeah.
have the fire going too. So, but you know what? When you live in Canada and you have a pool, you have a heated pool, so it doesn't really matter.
That's a good point. So today I wanted to talk about COVID-19 and mortgage deferral. So when COVID-19 happened, the government introduced the mortgage deferral and allowed for that. Can you give a brief um, explanation of what that is?
Yeah, so when COVID-19 hit us all, basically the government made the decision that they were going to tell the banks that they should be giving deferrals because if people were out of work, then for reasons outside of their control, there was a high likelihood that good people who pay their bills on time every time would not be able to meet their bills, given what was happening in the world and given that impact on their income. And so I believe that the right thing was done. The government and banks did what was needed to be done. And what was announced was basically a bit of an amnesty on mortgage payments where it wasn't a full lift, but basically pushing it down the track a little bit, meaning that let's say your regular mortgage payment was $2,000 a month. You were concerned about whether or not you'd make that, have the ability to pay it. And so they allowed you to defer it. Some banks were doing it on a month by month basis. Others were doing it on a automatically 6 month deferral. And a lot of our clients, depending on their circumstances, some did take up that offer, others did not.
And what do you think are the implications in the future in regards to your to the mortgage payments, to the interest, as well as to the principal amount?
Sure. Well, let's just say that I'll use that example, $2,000 a month. And for simplicity, let's say that half was interest and half was principal. Okay, so approximately 6,000 interest, 6,000 principal. It's not exactly like that, but just go with me on the numbers. So effectively, what would happen is at the end of your deferral period, the mortgage balance outstanding would be, $12,000 higher than it was prior to the start. Okay, and also there would be extra interest charged on the principal that was not paid down during that period. So the $6,000 or 6 months of principal that wasn't paid down would also have some interest charged on that. So, ballpark number in a situation like this, it might end up being somewhere between $500 to $1,000 of extra interest that might be capped onto the mortgage itself. So by deferring, yes, you are actually going into a little bit of deeper debt in terms of interest owed. And obviously that's not great, but it's still better than missing a mortgage payment and having that negatively reflect on your credit bureau.
So does that mean, so for example, let's use the 6,000, at the end of the deferral period, is that then added onto your monthly, spread out over the period of the years that you have left, or?
Correct. So the majority of the communications that we've seen with the banks is that, yes, let's just say you had so many years left and there's $1,000 added now to the amount of debt that you owe to the lender, then that $1,000 would be broken down over the remainder of your term. Let's just say $50 extra per month would be added to your standard mortgage payment.
Okay, makes sense. Makes sense. I think it was a good thing that they did, but you know what? The concern is still with the economy and everything that's happening, right? Whether some people are not going to be able to have that added amount onto their at the end of the deferral period. Any thoughts on that? On how the banks are gonna?
Sorry, is it around, not having it added or?
No, it's like, let's say for example, if you're having it added, but let's say that amount based on everything that's happening still is a little too tight for some people to be able to meet every month.
Right.
What
Oh, I
happens
see.
then?
Yeah, I mean, in those situations, here's my sincere hope. The world goes back to normal very soon. People go back to work. And the people who are on deferral hopefully are back in regular employment and no longer need to be on the deferrals. When that happens, if that mortgage payment has increased to a point that makes them uncomfortable, one real potential solution would be to actually re-amortize your mortgage. So actually, if you needed to, refinance and stretch that mortgage out over a longer period of time. I would hope that a 6-month deferral won't result in an increase in payment that's going to push people over the edge. I don't think that that's going to be the case for most people.
Okay, good to know. And hopefully, so hopefully you have a good Monday then.
I
Thanks
will have a
for
good
thanks
Monday.
for
And
spending
before I
time.
go, Quynh, I want to give you one little tip that may be useful. In that same example that we've used here, where effectively for 6 months, you haven't had to pay this $12,000, so this $2,000 a month, which is $12,000. And let's say things were not as bad as you had expected. You might very well end up with this $12,000 sitting in your bank account, extra and above and beyond your regular savings. If that is the case, what you may choose to do is exercise your standard prepayment on your mortgage to immediately pay back that extra cash, because now the world's back to normal and you don't have to worry about that. So just know that most mortgages do have a prepayment allowance in any given year. And so if you did want to exercise that, then that may be another way to deal with getting rid of that interest a little bit faster.
So with that prepayment option, does it then still calculate as 6,000 to the principal and 6,000 to the interest, or is the interest amount going to be a little bit higher on that?
It'll be, well, there'll still be more owing than when you started. So that if it was
Okay.
just the 12,000, just understand that it won't cancel the interest that was accumulated on that pure amount of money during that period of time.
Oh, okay. Okay.
Okay, but
Good,
it would
good
be
to
a
know.
way to at least sort of make up for the lost months if you end up with a little bit extra cash in your bank.
Oh, for sure. And with the unprecedented times that we're going through, it's good to know your options and any way that we can help, right? In terms of getting out of that whatever hole you were put in or whatever has happened during the pandemic.
You got it. Yeah. So I hope everybody stays safe, and I hope that the world does return to somewhat normal levels in the very near future.
Yeah, I hope so too. And stay safe yourself, and we'll talk to you next week.
Thank you, Quynh. Bye
Thanks.
bye.
Take care. Bye.